can hear it, but it's really scratchy. Okay, the texts are coming in. The phone calls are coming in. I can hear you, but it's really scratchy. Thank you very much. A listener in Ellenboro. Oh, they're just calling. Okay, how is that? Now we're getting some feedback now.
We're going to retire this microphone.
We're going to, well, it needs to.
There we go. We're going to retire.
Is that, yeah, we're going to retire this microphone. Is that, I'll tell you what, that is the beauty of local radio. It doesn't get better than this.
Listeners call, they got a problem?
The listeners call to tell us that they can't hear us. That is, I'll tell you, it doesn't get better than this.
We'll fix it.
Can you imagine when all radio was like this?
Now you have to start again.
Back Now I'm gonna have to start all over again. And I was so excited. We started right at 8:00 sharp too. I was so excited. But you know what? That's what I love about it. You don't get that from pre-recorded. Okay, well, so do we need to start all over again? Boop 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 boop. That was the international Morse code signal. And that marks the beginning of my program, Gilbert Talks Taxes. You mean go all the way back to the beginning? Okay, so I already welcomed. Well, Northland Cable Channel subscribers saw us, or the ones that are here looping us live on www.wcab59.com.
That's been confirmed. We have good audio on the stream. So.
Okay, it has been confirmed. We have good audio on the stream. That's technical talk for you can hear me. Okay, so last week, I don't know where we lost everybody. Last week, I got a phone call. Listener called in. So while I was giving you the whole talk about who I am, I'm an enrolled agent. Enrolled agents are licensed by the IRS, one of three people, the CPAs, tax attorneys being the other. Why I became an enrolled agent is because I had clients all over the country. I wanted a national license. And as an enrolled agent, I can represent people. I actually have clients all over the world. I now, Todd, can say I have a client in Ethiopia. He's an American who works for World Bank, lives in Ethiopia, has to file a tax return here in the United States because he is an American. But he's living in Ethiopia, and we met him on a recent trip to Ghana, and he said, I need somebody to help me. And I said, I'm that person. I've got clients in Mexico, Brazil, China, Germany. My Germans moved back to Germany there for a while, so I can say I've got clients in Germany again. So what I do is taxation, small business consulting, individuals, tax preparation, and issue resolution. That's the big thing that I offer. I also do financial services. I'm securities licensed to help people with 401ks, IRAs, SEPs, and Simples. But today what I want to talk about, what this program is going to be about, last week somebody called, wanted to know what the Fresh Start program was. So, Fresh Start is actually it's kind of an umbrella. It's the IRS officially calls it the Fresh Start Initiative, and you'll see or you'll hear, especially on the radio, you'll see on TV commercials, new IRS programs that are available. If you owe $10,000 or more, well, I sound just like one of them, don't I? If you owe $10,000 or more, relief may be there for you. You can pay pennies on the dollar or whatever the ad says. Get rid of your IRS debt. Call us now is usually what they say. And they talk about the Fresh Start program. Well, there's nothing new about it. Fresh Start has been around. Actually, they started calling it Fresh Start in 2011. But the programs that are in the Fresh Start Initiative, the Fresh Start program, have actually been around, some of them since 1985. 1985 is when we had our major rewrite. They rewrote our tax code. I've talked about this before. The president at the time was Ronald Reagan, and he gave us, and last week I read part, Todd, I don't know if you were here listening. If you were listening, you weren't here. Jay was here. If you were listening, Ronald Reagan gave a very good speech on rewriting the tax code. And that speech, even though it was given in 1985, sounded like it could have been read yesterday. The problems that we're facing, the problems the IRS is facing, the problems that America's facing with taxation and taxes are so real today as they were in 1985 when they caused this rewrite. So they rewrote the tax code, put some things in there to help people that couldn't pay their bills, and the idea was to give people relief. So offering compromise is one of them, and I'll get through the whole list. I've actually got them all pretty much laid out here of what you can expect and what to do. But so I'm just trying to give you a little bit of the history of it. So in 1985 they rewrote it. They actually called it a kindler, gentler IRS, because the IRS commissioner at that time realized if people owe so much money that they can't pay it, they'll never pay it. We're better off getting a little bit than nothing. So they were not as heavy-handed as they had been before. I mean, in the 70s, the IRS just had a reputation, and a lot of the fear that we have today. I mean, I've said this before. I'll see a letter come in the mail, even though I'm an enrolled agent. So as an enrolled agent, if we fill out a power of attorney form 2848, the IRS will send me every piece of mail they send you. And that's very good for clients, especially, as I said, I have clients all over the world, all over the country. I know what's going on. You don't have to say, oh, Gilbert, I got something from the IRS, and then you have to send it to me, fax it to me, or email it, or whatever. I've already gotten it. And it's very efficient. I probably say I get 99% of the mail. Every now and then I'll get something you don't get. So, but it's very efficient. So, okay. I'll look at those questions later. So people are calling in with questions, but they can hear me. At least they can hear me now. They're calling in with questions. So that's a good thing. But so offering compromise was part of that in 1985. The installment payment agreement and all these other things that I'm going to get into. I was actually involved in an offering compromise application in 1993. That one was denied. I did another one. I was involved in another one in 1999. Actually, 1998, and it got approved in 1999. So these programs have been around for a while. So you hear these radio programs, new programs, well, there's nothing new about them. Now, in 2011, they kind of put all these programs under an umbrella, called it the Fresh Start Initiative. A lot of that was in response to what had happened in 2008 and 2009. And what happened in 2008, Todd? The economy basically fell apart. The housing bubble exploded. We knew it was going to happen. Those of us in the business saw it coming because just lending was too loose. People that should never have qualified for houses bought houses. Banks had to foreclose on these houses as part of the arrangement with the federal government for these banks to write off hundreds of millions of dollars of bad loans. I guess the final number's in the billions with a B, of bad loans. They had to give people what's called a 1099-C. 1099-C is a cancellation of debt. I'll never forget the first one I saw. Taxpayer calls me, said, you were referred to me. I just got a letter from the IRS saying I owe them $100,000. Actually, it was $99,000. I need to see you, huh?
That didn't help.
No. When you're at that point, it could have been $300,000. He didn't have it. He said, I just moved here and I got this letter. I called a friend of mine to see who he would recommend. He recommended you. Can I please see you? Can I please see you now? So I actually had an opening in my schedule that afternoon, and I said, sure, come on in. Anybody who got a letter saying he owes $100,000, I want to look at this letter. And I remember it, $99,258. I don't know why I remember it, but I remember it. I said, come on in. He brings me the letter, and literally this man was white as a sheet of paper. When he got that letter from the IRS, he was just petrified. And when he opened it, and it said he owed more than he would make in the next 10 years, he was very, he just was beside himself. What had happened is he got caught in that 2007 bubble, had a house. He was way in over his head on a house. He had moved down here from up north. He had a house that he had bought for somewhere around $300,000. The house was probably not worth more than $220,000, but because of just fast loans, easy to write loans. They were not underwriting. They were not doing appraisals. They were just, if they could get you, if you qualified for the loan in any way, shape, form, if you could fog a mirror on a cold day, you could get a loan. So they give him this loan. He loses his job, and I'm trying to remember the whole story. Loses his job, and his wife almost lost her job. She had some problems. He couldn't make the payment. He found somebody to buy his house on a short sale. So, because the house was, like I said, probably not even worth $220,000. Somebody offered him around $200,000, which again, it's probably what it was worth. $200,000. He owed $300,000. Remember, people got those loans. They called them jumbo loans. They were jumbo, all right. People were financing 110%. So you don't have any money to put down, that's okay. We'll finance it. We'll even finance your closing costs. Closing costs on a $300,000 house are right at about $15,000. So he was beyond upside down. Bank accepts the short sale. He thinks he's out of the woods. Him and his wife found a job down here. They come down here to work. A year later, he gets a 1099-C for $109,000. Well, he didn't think anything of it. He didn't know what it was. Nobody had explained to him what it was. He thought it was just it was from the bank. He thought it was just another bank document. So he couldn't even know where it was. Did not put that on his tax return. See, when you're forgiven debt, that forgiven debt now becomes taxable income. So that I think it was $119,000 was taxable income to him, which kicked him into a whole other tax bracket. So 30-something percent of that, 30-something, so 35, 40,000 of that was taxable. Throw in a 25% penalty for failure to file, throw in another 25% penalty for under-reporter, and throw in a little interest just cause, and now his debt 2 years later is $99,258. What he didn't know was that so many people got caught up in this. The government had passed a law saying if you're insolvent, or it was because of your primary residence that you lost, there was relief. So actually, when I got done with it, he owed zero. But as a result of all of this, and people just not knowing what to do, people ended up with tax bills of $50,000, $70,000, $80,000, $100,000. So around 2010, 2011, the IRS realized they had a problem. There was nothing there. These people lost their homes. There was nothing there. They didn't have the jobs they had at the time. Many of them were now unemployed. And then there's all the other reasons. There's health issues, there's divorce, there's death. So in 2011, they realized they had a problem on their hands. They got to do something about this. So they lumped this whole basket of services into the Fresh Start initiative. And it was very popular. A lot of people took advantage of it. In 2012, they rewrote it and just increased a lot of the numbers. So I'm going to get into exactly what all those initiatives are. Let's go ahead and take a break. This is Gilbert Talks Taxes right here, WCAB 590 AM.
I want to welcome Tim Schlabach and Foothills PhotoWorks, a professional hybrid commercial photography studio. If you're concerned about your social media image, listen up. Whether you're an executive, real estate broker, lawyer, or business owner, your image matters now more than ever. And you know first impressions count. Whether you need professional portraits, corporate headshots, images of your products or facility, aerial photography, and videos of buildings, boats, or large acreage, affordable professional help is here for you. Foothills PhotoWorks can create media that will help your prospects get to know you better and help you look your best. Call for an appointment. That number is 828-668-2304. Mention this ad and receive 15% off your first session. That's 828-668-2304. Foothills Photo Works, your media professionals.
It's official. I'm celebrating another year of looking fabulous, all because of RSL Salon. Whether it's a hairstyle, a manicure, or a pedicure, call Robin at 289-9110 because everyone deserves to look fabulous. That's 289-9110. We are back right here, WCAB 590 AM on this beautiful, beautiful 25th day of November. It's hard to believe. November is over. The 25th. It's over Thursday. I just started. What's happening? I mean, there's trees that still have leaves on them. I don't know. This is just not right. No, 1 month till 1 month. We're already doing end of the year tax planning. This is Gilbert Talks Taxes. I am Gilbert Carmona. I'm an enrolled agent. If you need to get me, you can call me. My office number is 828-289-9300. I have an office right here at 113 Whitesides Road, right at the end of the street here. I have another office in Tryon, the beautiful Art Deco building just off the historic downtown at 226 South Trade Street. My main number, though, is 828-289-9300. You can call there, make an appointment for anything you need. Right now, we are heavily into end-of-the-year tax planning, making sure, especially small business owners, making sure you are ready for next year. And next year is right around the corner. They haven't announced the official first day we can e-file yet. I'm waiting for that. Typically, it's somewhere in the end, the 20th, 21st, 23rd of January. It's usually on a Monday or a Tuesday, so we'll know as soon as they announce it. With all this tax talk going on in D.C., and again, I haven't talked about, last week I said I'm not going to talk about the new tax law because there is no new tax law. You listen to the media and you think this is what they're going to do. We don't know what they're going to do. Everybody's got a proposal on the table, and this could all change in a day. This could all change in a meeting. So they're going to get back in session. They'll run it. We probably won't know anything till the end of the year, the first week of January, which makes tax planning really hard because every year we're sitting here waiting to hear what's going to get extended and what's going to get repealed. It's kind of hard to do tax planning going back because you don't know what they're going to retro. So, but you just wait and pray is all we can do. Listener called real quick. They're getting a 1099 miscellaneous, other income, for about $1,000. What's it going to do to their tax return? How much money should they set aside for it? It affects what happens with a 1099 miscellaneous is it just gets lumped in with the rest of your other income. If you want just a ballpark of how much money you should set aside, to be safe, 20%. 15% for the federal, 5% for North Carolina. That's just a rule of thumb. But it determines on how much other income you had. Now, a $1,000 1099 miscellaneous is probably not going to put you in another tax bracket. But if it was a $50,000 or $20,000, it could. It could bump you up to another tax bracket. And then, did you have any expenses? Usually you get these when you do self-employed work. Did you have any expenses against that $1,000? Mileage? Did you buy any materials? Sometimes what will happen is, carpenters get these. They sign a contract with a business to do a remodeling job. Remodeling job is $50,000, but of that $50,000, $15,000 or whatever the number is, it could be $25,000, half of it, is materials. So they will give you a 1099 for the entire contract amount, $50,000. So you on the tax return have to let the IRS know that, yes, I did get $50,000, but only $25,000 of it was actual income to me. I had to buy materials, and they understand this. This is nothing out there. This is normal. And then you get to expense all your other things for your business. So, but if it's just $1,000 straight income, no expenses, and you're worried about it bumping your taxes up, 20% should be plenty to cover this. And it may have very little impact on your tax return. It may have no impact on your 44,000. 4,000. Oh, it was $4,000. I'm sorry, I thought it was 1,000. $4,000. $4,000. Again, that's not going to have much impact. 20% would be plenty. Would be plenty. Set aside $800, and you'll be more than safe. Okay, let's get back to Fresh Start Initiative. So I gave you the whole history of it. Probably told you more about it than you wanted to know, but I felt like it was important, so you understand the IRS is thinking about all of this. Well, she called to thank me. Well, you're welcome very much. This is local radio. It doesn't get better than this. It doesn't get better than this. So what changed in the Fresh Start Initiative? One of the main things that changed that I think is very important is the IRS made changes to their policies regarding tax liens. Now, don't forget, a tax lien is when you owe the IRS money. They realize they've got you now. You owe this money. You've already gone through the process. You've already been, you've gotten the letters. You've replied. You've had your chance to explain to them. If there's any doubt that you owe this money, you've already, your chance to petition tax court has already expired. You have a 90-day window to say, wait a minute, I don't owe this money. This is not my bill for whatever reason. You're an innocent spouse or an injured spouse, or it's a fraudulent claim, or whatever. Whatever. Your tax preparer really messed up. I get a lot of those on my desk. I get other people's tax problems. As an EA, that's what I do. They come to me because the other tax preparer messed up. The audit. So that's all gone now. This has happened. You owe $100,000 or whatever. Like the man that came with the $100,000, I fixed his problem. We wrote the letters, we sent the documentation, we proved our case. They sent back a letter saying you owe $0. Now, okay, so you owe money. The first thing the IRS is going to do, and North Carolina and any state, this is any taxing authority, the first thing they're going to do is they're going to give you a federal tax lien. You're going to get letter 3172 in the mail. And that the dreaded letter 3172. You get that letter in the mail, it says we're liening all of your assets. It doesn't mean they're taking them. It just means they're liening them. The theory is, and I agree with this, that the IRS is right in doing this. The theory is you're going to start liquidating assets to not pay them. Okay? You owe us this money. We've already gone through the process. You owe us this money. We're not protecting our interest. Any business that has lien rights on assets is going to exercise those lien rights if they believe that the person's not going to pay the bill. So this is not heavy-handed. I think this is just normal business. So the Fresh Start Initiative raised the threshold from, it used to be $5,000. If you owed the IRS $5,000 or more, they had the right to lien your assets. They raised it to $10,000. And again, like Todd said earlier, really 5 or 10, you've got a tax problem, period. Usually the amount doesn't matter. I find very few people, it seems like they either owe the IRS a little or they owe the IRS a lot. I don't have too many people in this gray area of 8,000, 7,000. They usually owe less than 5,000 or they owe 30,000. That just seems to be what I've noticed. It's important to remember that the IRS, now even though the Fresh Start Initiative raised that to $10,000, if the IRS has reason to suspect that you might be a fraudulent person or you might have some other issues there, they still can file a lien if it's below $10,000. They just have to prove a reason why, and it has to be a good reason. A supervisor above on high has to approve that. Are they going to, because takes them time and money to file these liens. It's not just a free thing they do. And they're filed in the county that you live in, or in counties, plural, that they know you have assets. So it's not a blanket national lien. And typically the first thing they want to lien is your house, or houses, if they know you owe plural houses. They made changes regarding the withdrawal of tax liens. And this is getting back to what I was talking about earlier. When the housing bubble closed and there were a lot of these foreclosed homes, and somebody just called here and asked me if I know of any foreclosed homes for sale. No, that's not. This isn't Gilbert Talks Real Estate. This is Gilbert Talks Taxes. You're going to have to find those yourself. They foreclosed on these properties, or people wanted to do short sales on these properties. What happened was there were federal tax liens on these properties. So the banks could not sell the property. The people could not get out from under it. So part of the Fresh Start initiative of the rewrite in 2012, they created what's called a tax lien withdrawal. They've always had this, but they kind of formalized it. The tax lien withdrawal simply is that. It removes the tax lien. But what you've got to do with that is you have to enter into a minimum of a 60-month debit installment agreement. What that means is you owe the IRS money, you get into an installment agreement, and it's got to be a debit installment agreement where the money automatically comes out of your bank account. They're not going to mess around with you sending them checks every month. Okay, they want to know that it's in a bank account. The success rate with those is usually much higher than with people mailing checks in. And they know it. That's why they do it. So you've got to enter into a direct debit installment agreement. They call it DDIA. And you've got to be, it's got to be a minimum of a 60-month, a maximum of a 60-month, because typically the longest they'll go is 72 months. If the balance is $25,000 or less, and after the third successful payment, so you enter into this payment agreement, it's debiting from your bank account. After the third successful payment, they will go ahead and release those liens. And what that does is it frees you up to then be able to sell that house or sell that asset, whatever it is. It could be a car. I've had the IRS lien all kinds of things. Art collections, automobile collections, inherited assets. I mean, they get very creative. Mineral rights, drilling rights, anything that can be liened, they'll lien. So they will go ahead and release those liens. The theory, again, is that now you're free to sell this asset, get some cash, and hopefully you'll use some of that cash to pay the IRS off. But at least it helped the banks. It was, I believe this was part of that bank bailout. You remember when we bailed out the banks? Part of that was to allow them to sell these properties that had been in foreclosure and had been repossessed. Well, they couldn't do anything with them because there were federal tax liens on them. So this helped everybody. Todd, let's go ahead and let's take another break. And I'm going to get into, I know everybody wants to hear about the offer and compromise, which is the one that wipes out all the debt and I owe them nothing. That doesn't exist. But let me talk about the offer and compromise. I'm going to talk about the installment agreement. Actually, I'm going to talk about that first because that's the first thing I recommend. And I'm also going to talk about North Carolina and South Carolina. A lot of my clients live in North Carolina but work in South Carolina, so they've got South Carolina tax problems. Both North and South have their version of a Fresh Start program. Let's take a break. This is Gilbert Talks Taxes right here, WCAB 590 AM. This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300. We're back. This is Gilbert Talks Taxes. Just enough for me to get a drink of water. We're right back. It's a beautiful day today. 36 degrees, 36.5, 36.6. Oh, it's just rising as I'm talking. This is Gilbert Talks Taxes, WCAB 590 AM. Welcome back. So, just had a quick question during the break. Are they still delaying the earned income tax credit this year? We don't know. I talked about it last week a little bit. I would be surprised if they did not do that. I have not heard, because we're all asking that same question. Are we going to have EIC hold? I have not heard. We haven't even heard a peep out of them. We did hear that they are going to enforce the Obamacare mandate this year. They didn't last year. You could tell them, the mandate is you have to have health insurance. If you don't have health insurance, there's a penalty. President Trump, ordered that the IRS stand down from that and not pursue collection of that if the people. So on your tax return, you have to tell them whether you had insurance or not. If you did not have healthcare.gov, Obamacare, well, they put I called it the button. They put a button in there that says, I'm not telling you yes or no. And with the stipulation that the IRS was later going to contact you, and you do need to tell them, you do need to provide it, and if you don't, you do owe the shared responsibility payment. So, but they did not enforce that. As far as I know, I have not heard of the IRS for 2016, tax year 2016, going back for anybody claiming, looking for that money. They may start. It has not happened yet. Now they're saying that for 2017, the tax season we're getting ready to go into, they are going to enforce it. That option's not going to be there. The option to not tell them either way. You have to say whether you had it or not. If you did not have required minimum coverage, you're going to have to pay a penalty, maximum of $2,085 per household for not having insurance. You can get exemptions. If you need to get an exemption, you better do it now. The time to get an exemption is not in January. Exemptions can take 3 or 4 months to get. There's a whole list of them. You can go to the IRS website, or you can go to healthcare.gov. I'm not doing a show about that today. That's a whole show. I can do a week-long show on that. There are all kinds of exemptions. Death of a family member, just a bunch of them. And no, I don't want to give them any money is not a good reason. The hardship implicated. There's a lot of them. Go to irs.gov. Look for Affordable Health Care Act, Affordable Care Act, the Unaffordable Care Act. Look for that, and you'll see the exemptions. But if you think you've got a legitimate exemption, you really need to apply now, because you may not have your exemption back either accepted or denied in time for tax season. So the EIC, are they going to hold it? And for those of you that don't know what I'm talking about, last year, if you had a tax refund because of earned income tax credit, or if you had any money coming back because of earned income tax credit, the EIC, or you had a child tax credit, your tax return was held for review. It was held a full 30 days. They did not even look at those tax returns till February 15th. Most people got their refunds or started to get refunds around the end of February, the 25th, 26th, 27th. Now, some people did get them earlier, but it was very few. They released them, very few. But the idea was to hold these tax returns and check them to make sure there was no fraud on them, because it is the biggest fraud item on the tax return. People claiming EIC. They use fraudulent tax, Social Security numbers, fraudulent income to try to claim these big credits. And then before, the IRS would just release the credit and then find out 3 months later that there was an issue and try to get the money back. Don't forget, they have your Social Security number. What they give, they can take back. Well, now Congress said, no, let's get a little more proactive on it. They bumped it 30 days. and made people hold up. Now, states, Hawaii, Alabama, Missouri, have done this now for several years. They're just holding your refund, period. They're going to check every tax return. Oklahoma checked everybody's tax return that was a non-resident filer for a refund. And Hawaii says their processing time is 16 weeks. So the people that live in Hawaii, they get a refund for. And I've actually had people that have worked in Hawaii. I've got a few clients that are government contractors, and they actually, there's a lot of military bases out there, so they've worked there. So I've actually had to prepare a couple of Hawaii tax returns. And the refund is held for a full 16 weeks. They verify all the information. So they're happy with these results. They were happy with last year's results. I would really be surprised, to answer the question, I would really be surprised if they did not do it again this year. I would really be surprised. And I would really be surprised if going forward, this was not the standard operating procedure. Because it worked. They said they saved a pile of money. So, getting back to that, I know the phone just keeps ringing. Tons of questions. Of course, we're talking about taxes. Let me get back to the Fresh Start Initiative. Remember that? So people come to my office, and I can get into all this, but I'm going to talk about some more of the technical part of it. But let me get back to the issue of why do people get in this mess in the first place? Okay, and the first thing I recommend you do. This is the first thing I recommend you do. So the why, I've heard every reason. A lot of it is, I call it the head in the sand syndrome. They have a couple of years, they have a problem, again, a divorce, you lost your job, a death in the family, you lost your house, you owe the IRS this money, and you give up. I had a man walk in the office a couple of weeks ago. He didn't file tax returns for 3 years because they got audited. His tax preparer made a major mistake. He owed, in the audit, he ended up owing $28,000 plus fees and penalties. So he was just so frustrated that when 2013 came along, he didn't file his tax return. 2014, he didn't file his tax return. 2015, the IRS comes knocking on his door again. By the way, you owe us this $28,000 and you haven't filed a few tax returns. So that knocked him out for 15 and 16. So somebody said, you really need to get a handle on this. And he finally called me because the torment just got that bad. So he calls me and he said, because the IRS sent him a letter. I'm going to talk about this in a minute. They'll go ahead and prepare those tax returns for you. Now, it's unofficial and you can change it by filing a tax return, but they'll go ahead to get an estimate of what you owe. They'll go ahead and take whatever data they have and they'll prepare a tax return. It's called a tax return in lieu of you doing it. They'll go ahead and do it. So he gets a letter from the IRS. He owes them $50,000 now, $60,000. I can't. It was a big number. The first thing you do is, he's like, I got a $50,000 problem. I said, no, you don't. You don't have a $50,000 problem. The IRS will let you make payments. Let's get you in a payment plan. Because when you get in a payment plan, it's called an installment agreement. There's several installment agreements that they have. When you get into an installment agreement, it freezes everything. Now, interest and penalty still keeps accruing, okay? Fine. But it freezes everything. They're not going to garnish your pay. They're not going to file liens and levies, again, depending on the dollar amounts and where in the window we catch it. As I just said, if it's over $10,000 and they feel like they need to do it to protect themselves, they'll do it right away. But if you catch it in time, you can stop it. You can stop liens and levies. Now, levies is where they actually levy to take that asset. A lien is just, they file in the courthouse a claim against that asset. The levy, they're taking it. Garnishments, they're taking it from your pay. And I've had some older people say, well, the IRS ain't going to get anything from me. I'm just on Social Security. Oh, yes, they are. They can garnish Social Security for up to 15% of your monthly pay. I've told a story several times. A lady owed the IRS money. I told her how to solve it. She said, "Oh, I'm not paying. I'm an old retired person. Forget it." She called me about a year later, or maybe 2 years later, and said, "My Social Security went up, and I got this letter from the IRS that I've paid the bill." I said, "Well, let me see that." Sure enough, they had been taking it from her Social Security. Because she had just started Social Security, she didn't know how much she was supposed to get. So she thought the amount that she was getting was the amount. Well, the whole time, they had taken 15% of her money for like 2 years, and oh, you're going to pay that bill. You're going to pay it. They'll garnish you. So, but if you get an installment agreement, it stops all that. You're now in an installment agreement. They'll go up to 72 months. Unless you have a special situation, they can go longer, but it really has to be special. And you have to give them a lot of information. Financial statements. I have to prepare a lot of paperwork to get that thing extended beyond 72 months, but 72 months. So I told them, I said, you don't have a $50,000 problem. If we take this tax bill, divided it by 72 months, you owe the IRS $650. I said, can you pay that? Oh yeah, I can pay $650 a month. I said, so you have a $650 a month problem. That's your problem, because you don't want to miss those payments. Because once you miss payments and you blow your installment agreement, it's very, very hard to get you back into an installment agreement. They will do it because things happen. People get sick. People lose jobs, and you can explain it to them. I have been able to get people back in an installment agreement, but they're very leery about doing it, and they give you they tell you this, we will not do this again. The other thing you have to do is you have to stay current on your tax returns. You cannot, especially if you're in this mess because you did not file tax returns for 3 years. They want to see you file one every year on time, and if you owe money, we need to stay current on it and pay that money. They do not like. People think this is not a credit card. People think they can just roll over. Well, I owe them $3,000 this year. Just roll it over into my debt. Snowball it, like one man said. Oh, just snowball it into my other debt. No, they don't do that. They do not do that. They may do it once, but that's it. They will tell you, we're not doing this again. Where are we? Let's go ahead. Let's just to stay on schedule, Todd. Let's go ahead and take a break now. Gilbert Talks Taxes, WCAB 590 AM.
My closet keeps shrinking my clothes. And if you have that problem, take them to Nancy at Nancy's Alteration Shop at 610 South Broadway, Forest City. Call Nancy today at 429-6900. Wear the clothes you like to wear. Let Nancy bring them back to life for you. That's Nancy's Alteration Shop, 610 South Broadway, Forest City.
I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite. We're back. WCAB 590 AM. This is Gilbert Talks Taxes because, as we all know, Todd, taxation with representation has not been such a good idea. And when you hear me talk about this stuff, you really realize it has not been a good idea. At least not the representation. Got a few calls there during the break. Do we have to file tax returns 77 years old, made between $13,000 and $14,000? A couple, and another almost identical question, Social Security income, do I have to file? Typically, if all you have is Social Security income, no, you fall below threshold, and you do not have to file a tax return if all you have is Social Security. I have some people that like to file a tax return. It's a basic tax return. It takes me nothing, to do. It's very inexpensive to do. Just because they want that tax return filed, they want that, closure, and they want to make sure that there's no problems. So they will file them anyway. But it's a zero return, and you do not need to file it. Now, the other person made 13 to 14,000. It depends what that income is from. If you had some income, you pay taxes from the first dollar. Some income is subject to, you're going to get your standard deduction. You get your, exemptions. How many exemptions do you have in the tax return? How many dependents do you have? Usually, if it's just straight income, you're going to fall below with your standard deduction and your exemptions. Even if you filed single, you're going to get $6,000 plus there, and you got the standard deduction of, another $6,000, so you're at $12,000. So you're going to be very, very close. But $13,000 to $14,000 of non-Social Security income, you may want to look at filing a tax return. If it's just Social Security income, no, you'll fall below threshold on that. You're not going to have a problem there at all. If anybody needs to call me, my telephone number is 828-289-9300. If you've got a tax problem, a tax issue, please don't stick your head in the sand. At least look at it. What is it? I say David faced the giant. So just look at it. What is it? Like to finish that story, I told the man, you don't have a $50,000 problem. You have a $650 a month problem. Actually, he owed North Carolina a little bit too. I got that into an installment agreement too. The two installment agreements together were about $700, just under $800. I said, you have an $800 a month problem. That's the problem you have. And if you make those payments on time every month, pretty soon that problem is going to go away. It's not this big thing. So let me talk about North Carolina and South Carolina. Where's the time go? It's 10 minutes to 9. I mean, just an hour and a half ago, I was sitting over there at Railroad Express having donuts. I was there with Jesse eating some donuts, and that's the place for. Have you been there? Railroad Express? You're afraid so? He's doing Davis Donuts over there. Everybody get over there to Railroad Express. I would like to do a program live from there one morning. Todd, do you think we can do that? Talk to Jim about it? But if I'm there and I'm talking to you on the phone and you're here, I'll send you coffee and donuts. That way you're part of it. And I'll be there on the phone, and we'll do the program from there. And people can come there and ask me tax questions. I think I just put something together here. This might be a good program to do. I love the place. It's got so much atmosphere. I think it's wonderful. So I was there at 7:30 having donuts and coffee, actually I was having tea, talking to Jesse, and here it's 10 minutes to 9 already. I can't believe it. Did I give him enough plugs, by the way? Oh, and Todd said, yeah, they're listening. They've got me on there. Todd said, thank you for the donuts. He enjoyed it. And by the way, I gave the other donut to Canyon, so you're going to have to send Jim another donut. Okay? So Jim's donut. No, I did not eat it. I ate my own donut that I had. Okay? So I'm going to talk about North Carolina. I've got 7 minutes left. I told Jay last week, I said, I can do several shows on this. This may turn into several shows. Let me talk real quick. Offering compromise. Offering compromise is just that, an offer in compromise. Okay? So let me get back to those radio commercials or TV commercials you hear. If you owe the IRS, you may, pay pennies on the dollar or pay reduce. Okay, what they're talking about there is the offer in compromise. So you owe the IRS whatever amount of money. You can't pay it. You don't have the money. You'll never have the money because with interest and penalties, it will always be more than you owe. So they have a thing called offer in compromise. Again, this has been around since the 80s. To do this offer in compromise, you have to do a lot of paperwork. The average offer in compromise takes 6 months to file. I actually learned a little rule recently that I didn't know. There's a little catch in there that if you submit an offer in compromise and they do not reply back to you within 24 months, the offer is deemed as accepted, which really surprised me when I read that, because typically when I submit an offer in compromise, I get a letter back 30 days that it's been received, and there is an application fee with it, $185. It's not free. You send them the $185. Then they'll send me, that check will clear, and they'll send you a letter, typically 30 days, maybe a little bit longer, that it's been accepted. I mean, that the offer's been received. Typically, it takes 6 months for this to work through the system. Only 41.8%, and this is the most recent number they can give us is from 2013. 41.8% of all offer and compromises are accepted by the IRS. But those are the ones that they've even accepted to look at. Oh, can you turn that off somehow? Thank you. We're getting feedback here. There's all kinds of feedback happening here. So, there you go. So, I learned that if they do not reject your offer in compromise, or if you don't even hear anything, in 24 months, it is deemed as accepted. That's why I always send those offer and compromises using certified mail, and I always make sure I get a letter saying they've received it. Because, I just used to think that was just because I like to keep good records. Now I see another important thing about that, if they don't do it in 24 months. Typically, though, all the ones that I've done, you will know something in 4 or 5 months. You will know if it's been accepted or rejected. You can actually do this yourself. The paperwork is simple. It's at irs.gov. There's basically 2 forms to do it. Now, there are 3 conditions for offer and compromise. Why the government should forgive me this money. Doubt as to the collectability. I just can't pay it back. And you have to document and prove why. Doubt as to liability. It's a gray area that I even owe it. You have to document why. Effective tax administration. All the ones that I have gotten, or most of them, I had one that was a doubt as to collectability. Person just didn't have the money. Wife had very serious, again, documentable health issues. It wasn't, it wasn't something she just didn't, potentially terminal problem that was just going to cost them more money than they will ever make. So I got one on that. But effective tax administration, it's just good for the IRS. It's good for everybody. It's good for the taxpayer. Let's just wipe this bill out and start new. So you fill out a form, a 656. You follow the form. They're going to want a 433 financial statement from you, 433A or B, depending if it's individual or business. You submit that with your $185 check, and you sit back and you pray. You will get back a letter. Now, you do have the right, let's say they reject you, you do have a right to appeal. I have never appealed one. That's letter 13711. I've never appealed one. I try to do my homework on the front end and really look at it and see, is this a candidate for OIC? I can almost tell when I do the financial statement, because if you own assets, they're going to want you to sell those assets. And I told the story last week about the man who had forgotten about a $10,000 IRA that his business had started for him like 10 years ago. The agent calls me, and when the agent calls you, it's never a good phone call. She calls me, because usually they write you a letter or send me a fax. She calls me and says, I just found a $10,000, actually it was $11,500 IRA in New York that this man has. He better not be hiding assets. I said, well, let me look into this right away. And he had forgotten all about it. And she said, I believe his story because I pulled the records. That's the kind of authority they have. They can pull your records. She said, I pulled the records from the bank. It was a one-time deposit. No money had ever been removed or no money had ever been added. So I said, no, he had totally forgotten about it, didn't even know it was still there. And we worked around that. They, of course, took the money because he owed them over $100,000. So offering compromise. Now, I got 2 minutes left. The states, I'm going to have to talk about this next week, Todd. There's uncollectible status. I've had people come to my office and say, oh, no, the IRS forgave my debt. I said, really? They forgave your debt? How'd they forgive your debt? Oh, they said, I don't have to worry about paying them. You don't have to worry about paying them. That's not the IRS I know and deal with every day. Tell me more about this. Well, they said I'm uncollectible. Oh, you look proud of that. Yeah, oh, yeah, they said I don't have to worry about it. Oh, yes, you do. It's a temporary status. It just means they know you don't have the money now, but you might later. And they're going to review it every year. You can get put right back into collectible status as fast as you got put out of it. It's really no status at all. I don't even know why they even have it. It's just telling you we'll look at it later. So in the minute I've got left, North Carolina also has their version of back tax relief. Same thing, though. Let's get you in a payment plan. Payment plan stops all the craziness that they do. South Carolina is not as generous. They don't have an offering compromise. North Carolina does have one. South Carolina does not. But South Carolina does have penalty relief. They're a little more liberal with their penalty relief than North Carolina. Bottom line is, if you've got these things, give me a call. 828-289-9300. I'm going to hit up on this some more next week because there's a lot here. Let's not do that. There's a lot. There's a lot here. What?
Just seeing if it was there.
It's there. The radio signal's there. Let's not put them on just yet. Anything else, Todd, I need to talk about?
Well,
Just how good those Davis donuts are. Let's just talk about that for a little bit more. Thank you for listening, everyone. This is Gilbert Talks Taxes. I'll see you, or you'll hear me, next Saturday, 8 a.m., right here, WCAB 590 AM.
North Carolina Tractor Supply, your Massey Ferguson dealer in Rutherford, has some really great ideas this year. This could be the year for you to get that Massey Ferguson you've been wanting.